Hey, Dan Passarelli here. Today I want to talk about something that, well, everybody's been talking about from Main Street all the way to the US Senate, and that is short squeeze plays. Now, the one stock that really made a name for itself lately has been GameStop. That's been the big short squeeze play of the year so far. And so I thought I'd take this opportunity to do a couple things. One is to back up and talk about exactly what a short squeeze play is. And then, second, talk about a stock that I think is really primed for a short squeeze right now. So, first of all, when someone shorts a stock, what they're hoping to do is make money by the stock going down. They believe that the price of the stock is above where the stock is actually valued, what it should be worth. This is a really important step in the price discovery process. And so what they do is they will go and they will borrow shares from someone and sell them to someone else with the hopes of buying the stock back later at a lower price and then return them to the person they bought it from. Now, that person doesn't go around and call all his friends to see who owns the stock that he can borrow. His broker does that for him, and it's all sort of mechanical behind the scenes, but I wanted you to understand how it works. Now, a lot of folks who short stocks are the big institutions, hedge funds, money managers that manage a lot of money. And so when these shorts are instituted, they're often instituted in large size, meaning they short a lot of shares of the stock. So one of two things can happen. They can be right and make their money and buy it back later at a lower price, and it's good for them. Or they can be wrong and the stock can go higher. Now, if you're used to the buy and hold strategy, there's an advantage to the buy and hold strategy in the long run. Stocks are expected to go up over time, so the longer you hold, the greater your chances of that working out. But not so when you short a stock. There, the odds are sort of against you. And further, a stock can continue to rise, so there's greater risk to the upside. So when a stock that someone shorts goes against them, it goes up, what they have to do is buy that stock back before it ends up losing even more money for them. So what some clever investors and traders have done lately is they've identified some stocks that have a great deal of shares that have been shorted, and especially stocks that they believe should go up in the long run, and they buy those stocks. And what that does is that creates upward pressure, and then when the stock goes higher, the folks who are shorted, they have to buy it back, which creates even more upward pressure, and it drives the price of the stock higher. And so it's a way that some investors and traders have intentionally planned to profit by trading against these people who short the stock. Now, one of the stocks that I believe is very primed for a short squeeze is ASO. That's Academy Sports and Outdoors. And this is a chart of Academy Sports and Outdoors. Now, this stock just went public, I think within the last 6 months or so. And you can see it's the definition of an uptrend. We're seeing higher highs and higher lows, and it's just been climbing and climbing. Now, if we look at their financials, this stock makes money. This company makes money. When they announce their quarterly earnings, they have earnings, and a lot of times they've blown the doors off them and made a lot more than analysts' expectations. I think there's a pretty good chance that this stock is going to continue higher, but here's the thing. In January, there was 11% of the float, that's the shares of the corporation that are available to the public, 11% of the float was shorted. That's kind of a lot. I mean, it's not a real lot, but it's kind of a lot. But now, as of today, the last figures that I've seen, 46% of the float has been shorted. That's a lot, especially for a stock that's making money and is in an uptrend. So I believe that ASO is primed for a short squeeze. So how can one play that? Well, you can do a number of things. Somebody can go and buy the stock. You can sell puts. Or in this case, what I like is buying calls. Now, the calls themselves, they're a little bit more expensive than I would like to see them. But a lot of these short squeeze plays, the calls are way more expensive than I would like to see them. So these calls are actually relatively cheap This is sort of the best case scenario for a potential short squeeze, where it's been in an uptrend, but we haven't seen that big pop just yet. And also, we can still buy call options at a fairly reasonable price. Once again, that stock is ASO. I'm Dan Passarelli, and I wish you to trade smart.